Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, May 20th. U.S. stocks are modestly lower in early trading, as disappointing earnings, especially from the retail sector, outweigh some M&A news. The target of the day's big buyout offer is Barnes & Noble. Liberty Media offered $17 a share, or about $1 billion, for the brick-and-mortar bookseller. Barnes & Noble has struggled to compete with internet retailers like Amazon.com, and has responded with a line of Nook e-readers. Its shares are jumping more than 30% on the news. Meanwhile, Fortune Brands is selling its Acushnet company golf business, which includes Titleist and FootJoy. The buyer is a group led by Fila Korea, the owner of the Fila brand, and the Korean buyout firm Mirae Asset Private Equity. The price tag on the deal is about $1.25 billion. Fortune Brands is modestly lower on the news.
Weakness in the retail sector is dragging down the broader market, following some disappointing earnings reports. At the top of the list is the biggest U.S. clothing chain, Gap. Its first quarter profit fell 23% on weak demand across its three flagship chains, Gap, Banana Republic, and Old Navy. In addition, the company was hurt by soaring product costs that it wasn't able to fully pass on to shoppers. Gap also cut its full-year earnings forecast well below analyst estimates, sending the stock down 17%. Meanwhile, Aeropostale is falling nearly 15%. The teen apparel retailer posted a 64% decline in net income and issued a much lower than expected outlook for the current quarter. Shares of Ann, formerly known as Ann Taylor, are also sharply lower. But Foot Locker and Zumiez are surging on strong quarterly results.
A couple other big stock movers to tell you about this morning. LDK Solar is tumbling 6%. The Chinese solar power company said it will postpone its offering of U.S. dollar-denominated senior notes, blaming unexpectedly high interest rates. LDK had planned to use funds from the bond issue to pay down its short-term debt. But moving in the opposite direction is Salesforce.com, gaining more than 7% right now. The business software firm posted a 7% drop in net income, but the results still topped expectations, and sales jumped 34%. And we continue to watch shares of LinkedIn. The social networking company debuted on the New York Stock Exchange yesterday at $45 a share and more than doubled in price. Today it's rising another 6% to right around $100 a share.
Energy stocks are getting a boost today, led by a 2% gain in shares of BP. The British energy giant reached a settlement with one of the other owners of the oil well that exploded in the Gulf of Mexico last year. Moex Offshore agreed to pay just over $1 billion, which BP will apply to the $20 billion trust it established in the wake of the disaster. Moex had a 10% ownership in the Macondo well and said it recognizes that the Deepwater Horizon tragedy was the result of mistakes by multiple parties. Crude oil futures are holding steady this morning, but most other commodities are higher, including gold and silver. Meanwhile, the dollar is rising against the euro and other major currencies on concerns that Spain's elections this weekend may call into question the country's willingness to deal with its debt burden. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.